Hello, hello, hello. Happy Tariff Wednesday. I almost wanted to say Tariff Tuesday, but yesterday was April Fool's. We all survived April Fool's and now we're back. Hello, good morning, John. Good morning, Patrick. Good morning, Jake. Hello, Harold. Good morning. Good morning, Jacob. Good morning, Anissa. Good morning, David. Good morning, Royal Palms. Sterling will be a little late this morning. How is everyone doing this fine? There's Sterling. Good morning, Sterling. How is everyone doing this fine morning? You know what I wrote? We have not seen Coco in forever. We have not seen Coco in forever. What a sad day it is. But we have to look forward to tariffs, the announcement coming officially at 4 p.m. Eastern. So cash markets will be closed. Futures will still be open. But will there be leaks throughout the day? That's the real question. Good morning, Tony. All right, let's take a look. Let's take a look. Hopefully, some people got to watch Futures Edge, if not live, on the replay last night. So that's enough about that. But today we have the ADP employment change higher than expected. Positive number. I don't really follow that one. Found it's not greatly correlated with the other numbers, but that's what they're saying. So, or will we get a bounce tomorrow? Unemployment drop and everything? Who knows? And we have the unemployment numbers on Friday. So we have crude numbers today, but really nothing. Then we got Kugler speaking after the close. So cocoa is broke. Apparently, markets don't always go up. They always go up until they don't. Good morning, Daniel. And they don't always go down. They go down. You know what? But things have been on a run for a long time, to the point of absurd valuations. Good morning, Heinrich. That's where a lot of these dip people will get wrecked, because the problem is when you buy the dip and it doesn't recover, and then you get a lower dip, then they buy that dip, and then you keep buying the dips until you can't buy the dip anymore. That's the problem. So, okay, did that number just come out? Because I didn't see that before. Q1 total deliveries 336, produced 362, 336. Thank you for that. Estimated was 390, so big miss there. Going to have to take a look to see what's going on with Tesla too. Didn't we see yesterday they're going to start pre-selling the robot for 2027 delivery? Nice little try to pump it there. All right. S&P 500. It's pretty red. It's pretty red going into the tariff announcement. Again, we'll have to see. I'll show you what we had. Percent B buys trigger on the close yesterday against the rotation zone. I'll tell you what key level I'm watching. Groups. Let's just refresh this. Everything's negative with consumer cyclical technology and comm services. So the higher risk assets are down the most going into today. Fed Watch tool still has 3 cuts priced in. Fear and greed still in extreme fear. And the breadth is still, we've had a little bounce off the lows, but rolling back over. Schiller PE is still 35. Still 35. So if you're looking for a cheap market and you're thinking, oh, this sell-off's got to be near over, this market is not cheap yet. It's nowhere near cheap. This market could still technically, to get the Schiller PE back to 15, we could see, to get it back there, you'd just have to see another 50% drop or 40-something% drop. So that's where we sit. And Forge willing to remove tariffs if the U.S. does? Well, we'll have to see. So thanks for all the information. Let's get straight to the market. So yesterday, again, remember on any percent beat buys, my first target area is the rotation zone. And we smack dabbed into the rotation zone. We smack dabbed into the rotation zone and started to sell off. Now, technically, the stop is below the low of the bar that formed the setup, if the next bar was not lower low. However, What am I watching? I am watching this key level. By the way, if you were wondering, this was not a double top pattern. Why? Because this is the move that started it, okay? And all the targets would be beyond it. So cannot trade that as a double top. The key level I'm watching is the 62.5 on a closing basis. Now remember, that would be below yesterday's day session spike low. All right. And it's within the pullback area there where I watch for a bounce play between the 50 and the 62.5. If we close below there, okay, then again, on a 4-hour basis, you can even use a 1-hour basis on this one, then my probabilities would tip to where we'd retest the yesterday's lows, and I would not want to be long anything at that point. Before that, I'm going to see how this behaves, and we're going to probably get rumors getting leaked about the tariffs. I can't guarantee anything, but I'd be surprised if we don't get rumors leaking before the announcement. So that's the key level. Back to the upside, I'm paying very close attention on any bounce. The minor resistance is 56.35. Not only is it harmonic, but you see here it was a prior support shelf that was the candle bodies. So that's the first area of resistance I'll watch. If we get through there, the 25% harmonic roughly lines up with these candle body top areas, another key resistance. So I'll use 56.55. So we sort of have mini clusters right there. Then to the upside, if it keeps going, 56.75, we have a dual cluster. And then it would continue up if it were to break through there. Again, if we get some announcement and the market gets bullish, then exactly what I will do is use these little mini harmonics if we break through this two-top area. Not a double top, this two-top area. Okay? What's interesting also is this is a clear path move, and the final target, this does not mean it has to happen. We can have the market roll over and invalidate the percent B, and it didn't get to the end of the clear path, which means there's extra weakness in this market. But if it does turn around, we have a cluster here. You see where I drew the breakdown area for the clear path. That's the breakdown area, and we have this little projection cluster there. So that's everything the upside. Again, if we start closing below this 55.95 area, then I'm just using the harmonics. You're into a clear path move down here with the technical target being right behind the 75. So I'll just use the 55.75 area. Then 55.54 area are the first two targets. If we drop below, if we get something happens and we drop below yesterday's low, Monday's low, then it's the minor target is last Thursday, and the next major target is 54.65. I'm more worried about something surprises the upside. I think a lot of stuff's baked in the negativity about the tariffs. Like, what if there's an announcement Sterling just put in that news? And I'll get to some other stuff. Yes, Israel removed all tariffs on U.S. goods. So what if we get the leak? Oh, okay, trade deal without Mexico and Canada wouldn't remove tariffs if the U.S. does. What if that goes through? You could start to see, hey, we could start to see some upward surprises. So that's more what I'm focused on, just from again, that's not a trading strategy. You have to have a trading strategy, but that's what I'm focused on, possible upside surprises, because I think more of the downside's been baked in. But I will still follow the technicals, because the technicals, I got to follow the probabilities, not what could happen. NASDAQ, same thing. Ran smack dab rotation zone, the key pullback area here. Pretty much the same thing. The 50% right where we're trading above is my first key area, is 19,337. Then the major area I'm watching is 19,246 on the closing basis. All right. The rallies, you can see how it lines up with some candle buys and tops here. 19,517 would be the first major target. The minor target would be 19,427, and then the 19,607. And if it breaks above yesterday's highs, we have a key cluster right around 19,900. That's not the breakdown zone of this clear path move. It would actually be where the green bar is. The 19,964 would just be above there. All right, if we break down, remember, we'd have to take out Monday's lows. If we took out Monday's lows for something, we had a very bad day. Even if we followed through tomorrow with a very bad day, in case you can't tune in, my downside cluster area is about this 18,741 to 18,790. The Dow, again, the key level I'm watching here, I'm still using these retracement harmonics. We're trading right at the 50%, this 41,928, 930 area. Key to me to the downside is 41,622. Very key resistance at this 42,400. If we break above there, then I'm going to be focused overall if we can get our strong momentum move on, 42,850. Russell, there's no double here. This is now, there was a mini one and now it's turned into a triple. Okay, if the Russell break, and the Russell is very close to breaking Monday's lows. If that does, I'm using 1967 as the first target, and then 1949 and 1953 as the next target, and 1953 on a closing basis. Okay, the bigger double is still potentially in play. The little rotation did not invalidate it. To the upside, 2027 is very key resistance, and then the rotation zone at 2044, 2045. VIX, a little elevated going into this. Again, I look at the VIX purely also from a technical perspective. So if we spike up and get above 24, I'll be watching as it. That doesn't mean it has to stop, but I'll be watching. If we did reverse over the next couple of days and close back below 2158, it would be a double top, and we could return to 1725, fueling more of a rally. If this does spike through, then the harmonics the other way. Look at where the top is. Right, let me take off this. Look where that top is, right at the 62.5. So if we were to close above 2486, then we could continue to see downwards momentum and a continued rise in the VIX. So that's exactly what I'm looking at there. The DAX on the daily, we got the first cross of the daily rotation zone. It's the only thing now that would make me potentially bullish on the DAX. We're not there yet. I want to see if this gets below this 22,344 area. That would put it in double bottom territory, but then it would have to trade back above this 22,797. That's the only thing that would get me bullish on the DAX, especially if we break down below the 50 EMA. Okay, it's trying to hang on to critical support right here. But if this breaks, you've lost the 50 and you've lost the critical support base. It's been built since really the middle of February. Notes the yield. Let's look at the yield. Talked about this on Futures Edge yesterday. Going to be watching where this week closes. I mentioned the daily, and then I need it followed through with the weekly, but do not ignore this 4.05 level. This 4.05 is going to be the major tipping point, besides this potential head and shoulders top. Dollar index, little pullback today, but we have not invalidated the final targets on the double. It still need to close below 103.34. Just so far, after hitting the first target, pulling back and chopping around. It is still against the rotation zone. You see how the rotation zone is held on a closing basis. This was a gap open above it, but you see we have no closes above the rotation zone yet. Crude. Actually hitting the target. I talked about this, hitting the target exactly to the penny. Never try to do that, but that's what happened. I put on slice yesterday. Pulling back, the key level I'm watching on any continued pullback is $70. Gold. Again, we talked about this in depth on Futures Edge, so if you want to hear that discussion, Does not mean the trend has to stop, but I'm watching for topping patterns also, and we have a potential. This is a very sloppy double top. Would not be shorting gold if this triggers. Would be watching to watch how it pulls back, because this could take it into the rollover gap. Okay, trend is still up, but it's getting very overextended. Very overextended. If you look at it on the weekly basis, 5 weeks straight up pulled even farther away than last time from the rotation zone. So that does not mean it can't keep going. It means I'm watching for more significant topping patterns with the potential divergence still up here and cycles getting to the top on the weekly and at the top on the daily. Again, not much to talk about there just yet. Still watching to see if this trend line holds the other way, and then we get the rotation back up to the weakening. Euro, we after hitting the first and second target on the double, we're still not invalidated it. We're going to be watching how this though closes today with the tariff announcements. Spiders, same thing. We gap down on a rally. You can use the harmonics the way I showed you on the S&P. I'm not going to go through that right now on the S&P futures, but just from a non-harmonic pattern on any bounce move, we're going to be looking at yesterday's opening price, 557.45, and then through that, the yesterday's close and the key harmonic that we poked above yesterday. And we did have technically a percent B buy in this also, this 561.90 area. Okay, that is going to be key. The Qs also the percent B buy yesterday. By the way, the Qs, remember, with Monday invalidated the potential double. And now at least we might get a pausing bar unless we have a major sell-off today. And look at this. Look at what we have now here. A key cluster at 75% harmonic if we do roll over. To the upside, same difference. Going to be looking on separate from the harmonics, which you can put on yourself. But 467.30 would be the first target, which would be yesterday's open. And then the full gap fill to close would be 472.70. Hope all that makes sense. And remember, do your own harmonics on this. So I'm trying to teach it so everybody, I don't need to keep repeating it, but everybody can learn to do it themselves. Tesla, disappointing delivery numbers, gap down, but not as much as I thought. Still below the 200, and as I said, there's no fantastic pattern right now in Tesla. It is still against the weekly rotation zone, so still has got to do some heavy lifting or make a weekly double bottom down here before I could do anything but from the bullish side, and still very fundamentally way overvalued. What else do we have? Don't know what else we have. I think that's pretty good for today. We'll just have to see. It's all going to be dependent on those leaks. Again, maybe we're going to be setting up for a little, if we pull back a little in the open, a little mini double bottom. But really pay attention to the 62.5 because that's below yesterday's spike low. Just to recap something. Remember, we had the potential double top yesterday that was confirmed, and I needed to follow through with a 1 hour close. So if you're trying to front run this pattern, you had to spike down, but it did not follow through with the close below there. Okay, that's why if you're going to try to front run a pattern, you have to be nimble and really manage the trade. Okay, especially if it starts retracing above the trigger point with momentum, and we did have momentum yesterday. You see, broke down, and then you got momentum bars. Like after the second bar, if you're trying to hope, that would turn into hope. Hey, this thing's, I hope this turns around and closes back below this on a 1 hour. No, it just kept going. So that's why if you're going to try to front run patterns and the time frame matters, then you have to treat it nimbly. You can't just go back and because it might never trigger officially. All right, with that, I hope everyone has a wonderful trading day. Again, if you haven't already, check out yesterday's recording. It was live, but check out the Futures Edge with myself, Bob Iacchino, and Jim Iorio. and hear what we have to say and our thoughts. And I will be back tomorrow morning, and we'll get to see what happened with the tariffs, what was actually implemented, and if they're the best tariffs ever. Bye for now.